Hello and welcome back to Investing for Generations, your channel for high quality stock research for long-term value investor. Today I want to analyze with you a company, a high profitable company, very stable, good dividend payer with an incredible PE ratio of only 6. The only thing I ask for you is to like this video and subscribe to my channel. This helps me a lot and motivates me to research more. Thank you. And the business I want to talk about today and analyze today is Allstate Insurance. Allstate Insurance is the fifth largest US insurance company by market capitalization, just behind my Travelers and Progressive, because both of them are in my portfolio. You see here Travelers have a share in my portfolio of 3.94%, and Progressive is a little bit smaller. It's around 2.5% right now. And so I like my insurances, and of course I also have Berkshire with Geico, a big insurance part. So I love my insurances overall, and today I'll look into Allstate because it seems like I overlooked Allstate, however this ever could happen to me. And so I will analyze Allstate today. We'll go through the financial numbers, calculate the intrinsic value, and tell you if the PE ratio of 6 is just like a fake and a value trap, or if it's maybe a big chance to buy in. So let's go. Allstate right now have a market capitalization of $35 billion with a PE ratio of 6 and a forward dividend yield of 2.82%. At a price of $116. When we look at the long-term chart, then we see that Allstate compound over time to currently $116, and especially after the financial crisis in the last, let's say, 10 years, it just rose from $16 to currently $116, or almost 600% up. And still the PE ratio is so small and the dividend yield relatively high to the S&P 500 in average. And so the question is it maybe still a bargain? And to find that out, let's jump into the financial numbers of Allstate. And therefore, as always, let's go to macrotrends.net and let's start with the revenue over the last 5 years. The revenue in the last 5 years just grew from $35 billion to currently $44.7 billion. So a slow but steady growth. And also when we look at the earnings per share, just grew from $5.05 to currently $17.31 in the last 5 years. When we look at the net margin, then we see a net margin of 12% currently. This is not that stable. It was in the last 5 years between 4 and now 12%. When we look at the return on investment, then we see that they have also here high volatility between 5 and now currently 16%. And the same we see at the return on equity. Also here it goes up and down and up and down. Currently we are at 20%, which is good, but also here we have some down peaks. When we look at the free cash flow over the last 5 years, then this looks very, very good. They was able to grow the cash flow from $8.67 per share to currently $16.43. And the big point in that is that the number of the outstanding shares just decreased a lot over the last few years, from 407 million shares to currently 316 million shares. So around 25% less. And this is of course big shareholder value. I really like that. And also last but not least, take a look at the balance sheet. The debt equity ratio with 0.26 is very, very solid. So nothing to worry here. This is a very solid financed company. And so overall, we have a very profitable company, a very shareholder friendly company with all the buybacks and also the quite high dividend. And so overall, it's just a good business. But there are also some risks. The biggest risk one is the high competition in the sector. There are really a lot of players. This is for sure a problem. And also, and this is maybe a result out of that, also the volatile margins and returns. But overall, Allstate was able to be profitable at every time. Overall, we have just a very profitable business here. But of course, as always, it's not enough to have a good business on the one side. You also have to calculate the intrinsic value to know if it's a good investment or not. And therefore, as always, I try to calculate an intrinsic value and use, therefore, the Excel sheet of Sven Carlin, the best YouTuber in the finance sector. Check out his channel. I put the link here to the free Excel sheet in the description. And then you can play around with every company and try to calculate the intrinsic value. And therefore, we need, first of all, the free cash flow. I use the free cash flow or the earnings per share to calculate and take the one which is lower at the time, and just to have a margin of safety also here. And the free cash flow, it's a trailing 12 months for Allstate was $16.43. And then also we need a growth rate over the next 5 years. I put 3% because it's a very slow growing business. In the past it was a little bit more, but I'm very conservative with these calculations. So let's say 3%. And for the years 6 to 10, 2%. Then we need the discount rate or my expected return of 12%. This is my expected return for all my investments in the stock market. And also we need a terminal multiply, and I took 10. Remember, right now Allstate is at 6, which is very, very low. In average, historically, they was around 10. So I put 10 as a normal case scenario. And then we come to an intrinsic value of $171, which is quite a lot over the current price of $116. So this would be a margin of safety of around 30%. This is quite a lot. If we calculate that with the best case scenario, and let's say the growth rate is a little bit higher and the terminal multiply is maybe at the upper end at 15, then we come to an intrinsic value of 220, which is almost double of the current stock price. And then also let's take a look at the worst case scenario. And let's say we have no growth in the next 10 years and just a terminal multiply of 8. And then still with $135, Allstate would be undervalued right now with a current price of $116. And so overall, it seems like Allstate is way undervalued, and even in a worst case scenario, it seems undervalued. And then also remember that Allstate is also a good dividend payer. I wonder a little bit if I overlooked something, because it's really incredible that in this very high overvalued market, there is a profitable company like Allstate, at every time profitable company like Allstate, at a PE ratio of 6. If I overlooked something, just let me know in the comment section. And so I will compare Allstate with my other investments in the insurance industry, especially with Travelers, because with Travelers, which I bought at the first time in May 2020 and then in June and September just reinvested the dividends, I'm up already 55%, and so Travelers seems a little bit overvalued right now. And so I really think to switch from Travelers to Allstate, because over the long term, it just seems like at the current prices, Allstate should be the better investment. But as I said, if I maybe overlooked something with Allstate, just let me know in the comment section, and I will sleep 1 or 2 days over that, and then we'll see what I decide. But I'm really think about to buy Allstate. And by the way, if you're new to my channel, you find deeper analyses to all of the companies in my portfolio with the analysis of the business, of the financial numbers, calculate the intrinsic value, and then I tell you in these videos when and why I bought. And so there is high transparency, and also every weekend you get an update on this real money portfolio with all the transactions. So, and if you like that, if you like the transparency, and if you like the whole idea of long-term value investment, and if you want to give me also a motivation kick, then just like this video, share this video, subscribe to my channel, and then just follow me on my road as a long-term value investor. That's it for today. Thank you for watching, and then we will see the next time with another video about another stock. See you then. Take care. Bye bye.